In this video, we are going to talk about Transenterix, trading under the symbol Trxc, where things are, how the future should look like, and if you should buy its shares. Before today's video begins, if you like my content, please like, comment, and subscribe. Trxc is a company specialized in development and manufacturing of medical equipment that can independently operate patients while requiring minimal human interactions. From the long-term historical data, the investors first put a lot of hope in this company before largely giving up, believing that the technology may be too early to be functional and accepted by the medical community. However, the 2021 authorization in Europe has reignited some of that interest from the market, resulting in its stock price to jump from 60 cents on January 4th to a peak of $4 before correcting back somewhat to the current level of $3.22. Keep in mind that the fact that its share price has been much higher in the past, and that it is still near its lowest historical price level, it will have an impact on our assessment later. We can see from the 2020 financial statements that the company has yet to prove that its equipments are in demand. Indeed, for both 2020 and 2019, its revenue covers barely 5% of its fixed operating expenses, and its cost of goods sold is actually more than the revenue it earns from those products. What this means is that the company should still improve its cost management to make sure that, to the very least, its products cost less than what they can be sold for, and that the demand is currently very low. Its cash reserves have been maintained mostly with the sale of common and preferred shares. Despite those disappointing results, the company already has some of its equipment authorized by the United States and Japan, and now they were just authorized by the European regulators to sell their equipment. This means that their products are actually genuine and that they are making progress in the regulatory side, which is often the most difficult, costly, and tedious step for a company that is specialized in medical equipment. Now, the questions are whether its equipment have a real demand in the medical world and whether the investors believe in the company's future. I personally believe that in the long term, there will be a real interest in robotics in the medical field, especially considering that they require less maintenance and cost compared to surgeons and have a much better scalability compared to the amount of time to train a surgeon. In the immediate and medium terms, however, I do not believe that hospitals are ready to massively use robotics to operate on patients. The technology is still considered to be a novelty, and due to the seriousness of the possible consequences, it is unlikely that they will risk it on the patients. This actually reminds me of the airlines. The fact that drones can have the capacity to drive the airplanes for decades now, but people still prefer to have a pilot on their planes. It is a similar dynamic and psyche with the surgeons and operations. It does take some time for these equipment to be widely accepted by the society. As far as the market is concerned, I believe that it is influenced by the current challenges in the medical facilities and believe that the price level is low enough to enter the company once again. I think that the current interest has a significant part of it that is temporary. Keep in mind that this is the same stock that many have abandoned back in 2019 and 2020 because they do not want to see their money locked in a stock that may take years to take off. I don't believe that this wait time has been permanently shortened simply because there is a lot of interest in the medical field at the moment. Those new authorizations are certainly good news, but I don't believe that they have such an impact on the big picture. That being said, The short-term interest is certainly present, and there are very high probabilities that the stock will go even higher during the weeks to come, similar to the price action of Bionanogenomics. Basically, what happened with Bionanogenomics is that the price has jumped at one point, and then just when we thought that it's gonna go into a price correction, it went to a higher level, and all that in a very short period of time. So with those stocks that were at one point in the penny stock level, it is not rare to see their price action to jump higher again and again in a very short period of time. So we must also keep that in mind when placing our trade. When we look at the options market, there are clearly more people buying call options than put options. This means that the majority of investors believe that the stock will go higher and want to have a right to buy the stocks at a predetermined strike price. The key strike prices are $3, $4, and $5. Because of this, I believe that the stock is likely to go higher, at least to $5 in the very near term. The current catalysts influencing the stock prices are the authorizations obtained in Europe and the market's interest in the medical field. Those catalysts are enough to push the company's stock price higher than the penny stock level it has been navigating in. And my analysis is that there will be at least enough steam for a week or two. The future catalysts are further authorizations from the regulators and the increase in acceptability of its equipment and demand from the medical community at large. There is a very important caveat to my analysis so far, and that is the company's past. I think that investors who wish to buy the shares should prepare for the scenario of the quote-unquote going back to normal. After all, if the company's shares showed a very lackluster performance until very recently, maybe the price will simply go back to that same scenario over the medium term, when everything go back to normal. What this means is that the trade should consider the risk of holding the stock for more than 6 months. I think that the current interest in the market is good for the short-term trading, but things are uncertain for the longer time frames. My recommendation is to buy the stock at the current level because there is a high probability that the stock will continue its bullish trend for at least a week or two. The price targets are $5 within a week and $8 within 2 weeks. 80% of the allocated amount should be bought now and 20% later if the price corrects. Because the company is still in early development phase, I would recommend a maximum exposure of 1% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.